How to use Fibonacci retracement like a boss. All right, welcome to this video on Fibonacci retracement trading strategies. This is one's going to be very controversial, so I'll be very curious to see what comments we get in the, comment section below. So we're going to go over here and we're going to put in our Fibonacci retracement line. So we start from this high, we're going to go to that low, right? This low right here. But I'm going to pull this over a little bit just so that you can see where these levels go. All right, so for Fibonacci retracement, we're measuring from this high to this low. Actually draw that from this high to that low. The other purpose of the Fibonacci retracement is to say, okay, after we get to this trend down, how far will we retrace before we continue back down? And as you can see, it looks pretty decent. So, by the way, this is a little pro tip. A lot of people don't use the 23.6 level. That is a good level. Highly encourage you to put that in your chart. Supposedly the magic level is the 61.8. Market never got back to that. Okay, I'm going to tell you why that's bull cookie here in a few moments. I told you this was going to be controversial. So, but what we do get to is the 23.6 here, and then we kind of hover it around here, and then we kind of hover around the 38.2, and then the 50 is where it finally puts in its high, and then it goes, well, if I showed you more of the chart, it actually goes careening down and actually breaks that low. All right, so now, why do these Fibonacci levels work? And you can't see this, but I am doing air quotes in the air. First of all, they don't. Okay, so that's the first controversy. They do not work. However, you can still make money with them. What? What you talking about, Willis? Okay, so what show is that from? Somebody, I see this off the cuff. You can tell I'm a dad. I got all these dad little jokes. But anyway, if somebody remembers what sitcom that's from, type it into the chat box below. So, as people have tried to learn how to predict market movements, they use mathematics a lot. And one of the things that somewhere along the line, somebody said, hey, wonder if the Fibonacci sequence will work because, Fibonacci is significant in architecture. It does create good sound structures. And of course, it's in nature as well. And so we see Fibonacci, we see it in flowers and in pine cones, and of course, most notably the nautilus shell. And, it's self-evident that the markets move like nautilus shells. So maybe not. But anyway, that's the theory. And so people are trying to come up with mathematical formulas to hack the market, so to say. And they noticed that when they started putting it on there, hey, these ratios worked. They actually worked. And so then next step is a lot of people started using it because people said, well, yeah, look at all these levels where the market did kind of respond to it. So then it goes to the next level, the next stage, then it became a self-fulfilling prophecy because once some people saw that, some of these levels are working, sometimes it must work. And therefore, the more people used it, and then it became a self-fulfilling prophecy just because a bunch of people started using it for entries, exits, and taking profits. But when did it actually ever mathematically sell? And that's the controversy, my friends, and the answer is no. So let me show you why I say that. So now what I'm going to do to prove my point and astonish and amaze you all, I'm going to go back, we're going to do the Fibonacci retracements again. All right, so we'll do it from here, do the same level down to there. And to go a little further out to the right here, and you'll see why uno momento por favor. I know right now you're all very impressed with my authentic Spanish accent. Now we're going to bring it out here a little bit because I want to show you these two. What I'm going to do is change this, and I want to show you the difference. So, all right, so now this one, we're going to click on that. And what I'm going to do is I'm going to change the ratios. So I've got a little template set up here. And we're going to load this puppy. And what I'm doing is I'm changing the ratios to quarters and thirds, as you can see, and those are going to be in black. So now, instead of our Fibonacci ratios of 23.6, 38.2, 50, by the way, 50 is not even a Fibonacci ratio, 61.8, 76.4, and of course 100% retracement. Now we have our quarters and thirds, which has nothing to do with Fibonacci whatsoever. So 100%, it's kind of hard to see there, but it's 25%, 33%, 50%, 66%, 75%, and 100%. Now, if you notice, they're actually pretty close to the Fibonacci levels. These two lines, the 23 and the 25, obviously very, very close, so negligible. This one here, the 33, okay, that actually worked better than 38 here. 50, as I said before, that's not even a Fibonacci level. But 50 is the one that actually worked. And then when we go up here, of course, 75 and 76.4, yes, significant. But look how close they are together. So what in the Sam Hill is going on here? What's going on, in my humble opinion, this is one man's opinion, but it is the right opinion, and that is that there's no, mathematical formula to the market based on Fibonacci or ancient Phoenician numerology or astrology or all that stuff. The only real somewhat mathematical application of the market is what's in people's minds. And when I say people, I mean the masses, because, well, my definition of technical analysis is the mathematics of mass psychology. So you got masses and masses of people out there. And what fractions do most people think in? They don't think in the fractions of, 23.6 or 38.2. They think in just general round terms of quarters, thirds, halves, 2/3, 3/4, especially with their money. So, for example, if they're up 25%, that's what they're thinking. Oh, I'm up 25%, and that's a benchmark for them. Or if they lost half for their money on their trade. Oh gosh, I'm down 50%. And they might not even say 50%. They may just say, oh, I'm down a half. I lost half my money. That would be a thing that a person would say. Or I'm up 30%. I'm up around a third. Or I've lost 3/4 of my money. These are the fractions that people are responding to, especially in relation to their money, their gains, their losses. And again, it doesn't mean that the market's going to go exactly to that percentage, because again, people are looking at that zone. And by the way, that's a very important part of all support resistance, is that these are zones. Don't think of the support resistance as lines, even though we mark them as lines on your chart. Don't think that has to go to the pixel on your monitor. It doesn't. These are zones or areas where people start. And again, the whole point is, these are zones where people will start buying, selling, or taking profits. And so they're not exact. So what do? Well, then we look at money flow. And we look to see, okay, is there buying, selling? It's all about supply and demand. So at these zones, do we see supply-demand shifts? If we do, then we're looking for that level to hold, whether it's Fibonacci, floor traded pivots, whatever. And if we don't see supply-demand shift, then we expect the market to go through those support resistance zones. If you want to have an extra edge, and we all need an edge in trading, if you want an extra edge in knowing when the market will break through these support resistance levels, such as Fibonacci or any others, and when it will not break through and bounce off of them, then you need to use my cycle indicator. A cycle will tell you the timing. That's what a cycle is. A cycle is a period of time. And it'll tell you when highs come in, when lows come in. And we use the indicator along with support resistance. We use the two tools together. And fortunately for you, I give that away for free. Just go to indicatorwebinar.com. I used to do this as a live webinar, but now I've recorded it. So the people, because one of the things we got is people all over the countries or world actually saying, hey, I can't make the live webinar. It's not in my time zone. So I decided to just record it and make it available 24/7 and for free. So it's a common indicator that's on every trading platform out there that I've ever seen, but I modify it and then I show you the techniques on how to time those highs and lows. So get it to indicatorwebinar.com. my gift to you.